We are the Group 8 and we will be discussing the Chapter 12 in Financial Management entitled Cash and Marketable Securities Management. We have 5 reporters today. Starting with me, I am Catherine J. Licudo and I will be discussing the objective of cash management, the reason for holding cash balances, and reducing the need for precautionary balance. The next reporter is Miss Danica S. Corpuz. She will be demonstrating the approaches in determining the target cash balance. Next up, Mr. Justine Incog. He will explaining to you the other factors influencing the target cash balance, cash management techniques, and slowing disbursement. Then Miss Zhaira Joyz Flojo, our fourth reporter, as she will explain to you the objective of marketable securities management, the reason for holding marketable securities, and the factors influencing the choice of marketable securities. Finally, Shaina Mae will wrap up our presentation by explaining the types of marketable securities. So let's start. Let us define first what is cash. Cash refers to the physical money you can hold in your hand like coins and paper bills. So it is stuff you can use to buy the things you need or wants directly without needing credit card or cheque. So when someone talks about having cash, they mean yung actual money that they can expend immediately. So kung may pera yung isang individual or organization, papasok dito kung paano nila ito imamanage ng tama, kung saan nila ito ginagastos, kung kailan nila ito igagastos, at kung nagagamit ba ito ng maayos. Like, kung kunyari sa company, kung yung pera ba is nagagamit nila for the purposes na maka-earn sila ng profit. Managing cash is becoming even more sophisticated in the global and electronic age of 21st century as finance managers try to squeeze the last peso of profit out of their cash management strategies. Minimizing cash balances as well as having accurate knowledge of when cash moves into and out of the company can improve overall corporate profitability. Cash management involves control over the receipt and payment of cash so as to minimize non-earning cash balances. So here, it emphasizes how dynamic of cash management have evolved in the first century due to the globalization and prevalence of electronic transaction. Finance managers are facing increased challenges but also employing strategies para ma-maximize yung profit and optimize cash flow in this dynamic environment. So, karamihan sa malalaking business, nahirapan sila sa pag-manage ng pera ng company kasi maraming factors ang kailangan nilang i-consider at binabalance para ma-maintain yung financial stability and success ng company. So, sa company, sino nagmamanage ng cash? Mga finance managers. Sila yung may responsibility sa pagmamanage sa money ng company kaya dapat may enough knowledge and skill sila about sa pagmamanage ng pera like analytical skill. Dapat may kakayahan silang mag-analyze ng financial data para makagawa ng good decision na relevant sa financial success ng company. Also, dapat may kaalaman sila sa mga financial tools and softwares like SAP, QuickBooks, Excel, at iba pang specialized accounting software. Ito, nakakatulong sa kanila ito para masusi nilang mamanage yung financial data ng company. Kaya nowadays, malaking tulong sa kanila yung mga technology kasi mas mapapadali ang kanilang trabaho kung saan mas madali nilang matrack kung ilan yung pera na lumalabas at pumapasok sa company. So, punta na tayo sa objective of cash management. The first objective of cash management is to accelerate cash inflows by optimizing mechanism for collecting cash. When we say optimizing mechanism for collecting cash, this involves implementing strategies and processes para ma-enhance yung efficiency of cash collection, ensuring na yung funds ay nare-receive siya in a timely manner. In simple term, you are figuring out the best and fastest way to get money from your customer. Like sa mga nagbi-business, maaari silang tumanggap ng payment through the use of cash register or a mobile payment app like GCash, Paymaya, ganon, para mas mabilis yung transaction. Basically, you want to speed up the process of getting cash, and that is the objective of cash management, which is make sure niya that the money coming into our company moves quickly and smoothly. The second objective of cash management is to monitor the cash disbursement need or payment schedule. Dito, keeping track kung kailan at gaano karami yung pera na kailanganin ng company para makapagbayad ng kanyang bills and obligations. Also, minimake sure nito kung may enough cash na available para makapagbayad ang company on time. Think of it like this, yung cash management is like financial superhero na minimake sure niya na yung company ay may enough money at right times para makapagbayad ng bills and cover other expenses and obligation. By monitoring cash disbursement need or payment schedule, business can avoid running into financial trouble and keep their operation running smoothly. It's basically ensuring that the company's wallet is well managed and used wisely. So the third objective of cash management is to minimize the amount of idle cash or funds committed to transaction and precautionary balances. Ito yung objective ng cash management kung saan dito i-reduce yung mga funds na sinave ng company in case of emergency. For example, sabi ng company magsisave siya ng money for unexpected circumstances. Napasobra yung na-save na parami. Dapat, hindi pwedeng excessive. Dapat enough lang yung fund na masave. Kasi if masyadong marami yung amount of idle cash or fund for precautionary balances, marami rin yung mamimiss ng company na opportunities. Kaya instead na nakasave lang at hindi nagagamit, mas mainam na i-invest muna ito or gamitin sa other purposes kung saan may ma-earn yung company na extra profit. Kaya 'di ba? Para kahit papaano, nagagamit yung pera at walang nasasayang na magandang opportunities. The last objective of cash management is to avoid misappropriation and handling losses in the normal course of business. So, kunwari, you are in charge of the class fund for a school project, and your main goal is to make sure that no one misuses or loses the money while you are using it for your activities. And ganun din sa business world. Dito, the goal is to safeguard the company's cash from being stolen and misused. So, dapat ang company ay mag-establish ng practices and controls to ensure na yung money is protected and used appropriately. Kaya, sometimes may mga instances na talagang nawawala or nami-misuse yung pera ng company kapag walang proper cash management. Kaya, importante ang cash management para maiwasan ang mga ganitong bagay. To achieve these objectives, proper planning of cash flow is needed. Effective cash management generally encompasses proper management of cash flows, which entails, among others, the following. The first one is improving forecast of cash flow. Here, pwede mo itong i-improve through the consideration of detailed budgeting, monitoring accounts receivable and payable, and managing the expenses of the company, and this consideration will help para makapag-forecast ng cash flow accurately. The second one is using floats. So when we talk about floats, it's about the time gaps between kailan ka mag-spend ng money and kung kailan mo talaga ito kailangang babayaran. By understanding and managing these time gaps wisely, the company can have a better control over their cash flow, ensuring that they have enough money available when they need it. The third one is synchronizing cash inflows and outflows. Dito, aligning the timing ng pagpasok ng income and timing ng paglabas ng expenses to maintain a balanced and stable cash flow. The fourth one is accelerating collection. Dito, speeding up the process of collecting money. It means finding ways para makapag-receive ng payments from customer or clients more quickly. The fifth one is controlling disbursement. It means managing kung paano and kailan magbabayad ang company ng kanyang expenses and obligation in a timely manner. Then, lastly is obtaining additional funds when and where they are needed. It's like having the ability to access extra cash kung saan nasa situation yung company na kailanganin niya talaga ng more fund. So, punta na tayo sa reasons for holding cash balances. The first reason is the transaction facilitation. Dito, keeping a certain amount of cash on hand allow a business to smoothly handle its day-to-day transaction and to fulfill financial obligation without delays. Dito, ina-ensure ng company na mababayaran niya kaagad yung mga bagay na kakailanganin sa pag-ooperate, pag-manage ng kanilang debts, and paggawa ng planned investment in asset that will benefits the business in the long run. Therefore, holding cash for transaction facilitation helps the business to maintain their operational and financial stability. The second reason for holding cash balances is the precautionary motive. So, ito tumutukoy sa practice of keeping some cash on hand as a precautionary or safety measure. This motive serve as financial safety net to handle unexpected circumstances and para ma-ensure that the business can meet their financial obligation. Some situation may warrant the need for precautionary balances include emergency expenses and income fluctuation and etc. So, sabi dito, ang precautionary balances are more likely to be important in seasonal or cyclical industries where cash inflows are more uncertain. Firms with precautionary needs usually rely on unused lines of bank credit. Ano nga ba yung mga example ng seasonal industry? Ito yung mga nagbebenta ng paputok every December. Doon sa month na yun, doon malakas yung kita ng mga paputok. So, kunwari, hindi nila ma-maintain ng maayos or ma-maximize yung sales nila, anong gagamitin nilang puhunan next year? Kaya importante na may extra fund ka para may magamit ka pa next year. The third reason for holding cash balances is the compliance with creditors' covenant. It means that a company is keeping a certain amount of cash on hand para ma-fulfill an agreement or promise made to its creditors. By holding an appropriate cash balance, the company ensures it can meet this covenant. Pinapakita ng company na may ability ito sa pag-cover ng kanilang financial obligations at pinapakita ng company na kaya niyang sumunod sa mga terms agreed upon with creditors. Therefore, this helps maintain a positive relationship with lenders and avoids any potential breaches of the loan agreement. So, sabi dito, holding cash balances for compliance with creditors' covenant, it is to be able to comply the requirements of lending institution and other creditors of keeping a certain percentage of borrow funds in their bank accounts. Example, compensating balance. Kunwari, nangutang yung company sa bank and may tinatawag na compensating balance. Ito yung amount na pinapamaintain ng bank sa company na nangutang at yung company hindi niya ito pwedeng galawin. So this practice ensures that the borrowers maintains a certain level of financial stability and is better positioned to meet its repayment obligation. The specified amount held in the bank account referred to as compensating balance na sinabi ko kanina na nag-act as a security measures for the lenders and creditors. The last reason for holding cash balances is investment opportunities. So here, keeping some cash readily available serves the purpose of being prepared for potential investment opportunities. Now, imagine a scenario where the company identifies a promising chance to invest in something valuable. Like for example, may sales or discount sa mga materials na kakailanganin ng company. Bumaba yung presyo nun. So, dapat yung company may available na fund kaagad para ma-acquire yung mga materials na iyon kasi pagdating ng panahon, hindi na bababa yung presyo nun or bababa man yung presyo nun pero matatagalan pa naman. Therefore, having immediate cash allows them to act swiftly.
So let's move forward sa approaches in determining the target cash balance. So dito sa target cash balance, in-identify natin kung magkano ang optimum level of cash ng isang business. And sa pag-identify, nakadepende siya sa operation ng isang business. So as a business owner o financial manager, alam mo yung financial health, performance, and condition ng business. So ikaw ang makakapagsabi kung magkano ang kailangang i-maintain na cash para masustain ang operation ng business. So, yung first approach ay yung cash budget. The cash budget is a tool used to present the expected cash inflows and outflows. Ginagamit ito para ma-assess kung may enough cash bang isang entity or business para may pagpatuloy ang operating activities nito. Kasi diba, kapag walang enough cash ang isang company, hindi nito magagawa yung normal operating activities like yung mga mag-purchase ng material na kakailanganin and yung mga wages ng employees. And it also helps na ma-determine yung efficient allocation ng cash and para na din ma-forecast yung kakailanganing cash para sa isang taon. So the second approach is the cash break-even chart. This chart shows the relationship between the company's cash needs and cash sources. It indicates the minimum amount of cash that should be maintained to enable the company to meet its obligations. So yung tinatawag na break-even ay level ng output kung saan ang revenues from sales ay equal sa total ng cost. And yung break-even chart ay representation of the relation between cost and revenue. So, para mas maintindihan natin yung concept ng cash break-even chart, let's have the illustration. XYZ company manufactures plastic which it sells to other industrial users. The monthly production capacity of the company is 1,200,000 kilos and the selling price is 2 pesos per kilo. Its cash requirements have been determined as follows. A fixed monthly payments amounting to 250,000 while variable cash payments are 50% of sales. Required, determine the cash break-even point mathematical approach and prepare a cash break-even chart to project the relationship between the company's cash needs and cash source. Sa pagkuha ng cash break-even point, yung formula ay fixed monthly payments divided by sales less variable cost divided by sales. So as mentioned sa problem kanina, yung fixed monthly payments ay 250,000. So, 250,000 and gagawin natin 100% yung sales less 50% which is yung variable cost over 100%. So, magiging 250,000 divided by 50% siya or 500,000 or 250,000 kilos. So, nakuha natin yung 250,000 kilos kasi as mentioned sa problem kanina na yung selling price per kilo ay 2 pesos. So, dito naman tayo sa construction of break-even chart. Yung y-axis which is yung total cost and revenue, while yung x-axis ay yung sales volume or number of unit produced. So, dito sa chart, merong fixed cost line and it indicates yung mga expense na hindi nagbabago kahit dumami yung volume ng production. And meron ding variable cost line which can be regarded as the total cost line. So, sa total disbursement na line, which can also be referred as cost line, nag-start siya sa 250,000 which is sa fixed cost. And unti-unti siyang umaakyat kasi nagva-vary which is yung variable cost. And next naman, yung total cash receipt na line or profit line. As we can see, nag-start siya sa 0 kasi sa business wala namang kumikita na agad-agad 250,000. Nag-start siya sa 0 and papaakyat. So, dito sa chart, kapag nasa less than 250,000 kilos pa lang, dun sa part na dun, meaning wala pang kita yung company. Pero kapag nag-exceed na sa 250,000 kilos or 500,000 pesos, meaning may kumikita na yung company. And sa cash break-even point, which is yung case dito ay 500,000 pesos or 250,000 kilos. Ito yung kailangan ng isang company para may balik yung puhunan. So, dito naman tayo sa optimal cash balance. Determining optimal cash balance refers to the process of analyzing the company's cash flows and financial needs para ma-determine yung ideal level of cash reserves to maintain on hand. At may dalawang model sa pag-determine ng optimal cash balance. And yun yung Baumol model and the Miller model. One of the models that can be used to help determine the optimal cash balance is the Baumol model. This model balances the opportunity cost of holding cash against the transaction cost associated with the replenishing the cash account by selling of marketable securities or by borrowing. So, sa Baumol model, ang objective nito ay ma-lessen or ma-minimize yung fixed cost of transaction and opportunity cost of holding cash balances. So, there are two costs na na-mention which are the transaction and holding cost. So, ang transaction cost, every time na isang company ay magbebenta ng securities, it will incur transaction cost. And yung holding cost, just like the name itself, it's about keeping cash. So, yung example sa Baumol model, kung may hawak kang cash ngayon, Ang positive side ay may opportunity na makapag-invest agad-agad. Pero ang negative side, pwedeng gastusin para sa expenses. The optimal cash balance can be found by using the following variables and equations. 1. The total cost of cash balance consists of a holding or opportunity cost plus a transaction cost. So, para makuha yung total cost, i-add yung holding cost sa transaction cost. And to get the holding cost, i-multiply yung average cash balance sa opportunity cost, and yung transaction cost naman, i-multiply yung number of transactions sa cost per transaction. Where C is the amount of cash raised by selling marketable securities or by borrowing. C divided by 2 is the average cash balance. C asterisk is the optimal amount of cash to be raised by selling marketable securities or by borrowing. C asterisk divided by 2 is the optimal average cash balance. F. Fixed cost of making a securities trade or of obtaining a loan. T is the total amount of net new cash needed for transaction costs during the period, usually a year. And K. Opportunity cost of holding cash not equal to the rate of return forgone on marketable securities or the cost of borrowing to hold cash. Number 2. The minimum cost of cash balance are achieved when C is set equal to C, the optimal cash transfer or optimal cash replenishment level. The formula to find the optimal cash balance is as follows. Optimal cash balance is equal to the square root of 2 multiplied by the total amount of net new cash required and by fixed cost of trading securities or cost of borrowing divided by the opportunity cost of holding cash. Punta tayo sa illustrative case 1, determination of optimal cash balance for Baumol model. To illustrate, consider business with total payments of 10 million for 1 year, cost per transaction of 100 pesos, and the interest rate on marketable securities is 8%. The optimal cash balance is calculated as follows. Optimal cash balance is equal to square root of 2 multiplied by 10 million times 100 divided by 8%. So, yung nakuha nating amount ng optimal cash balance ay 158,114 pesos. And dito sa formula, kinuha din yung optimal average cash balance. So, dinivide yung nakuhang amount ng optimal cash balance sa 2. So, yung optimal average cash balance natin ay 79,057 pesos. So, yung optimal cash balance na nakuha ay 158,114 pesos. It means that if the company has 158,114 pesos of cash balance, it is the point in which they can minimize the total cost related to cash. So, dito naman tayo sa second model, which is the Miller-Orr model. It takes a different approach to calculating the optimal cash management strategy. It assumes that the distribution of daily net cash flows is normally distributed and allows for both cash inflows and outflows. So, it was developed by Merton Miller and Daniel Orr. Sa model na ito, ina-assume na yung distribution ng daily net cash flows ay normal and randomly. So, pwedeng mababa, pwede ring mataas. And sa model na ito, nagme-maintain ang isang business ng minimum acceptable cash balance, which is tinatawag na lower limit. At ang lower limit ay sineset ng management ng company. Nakadepende ito sa acceptable risk of cash flows gap, creditworthiness ng isang business, at sa expected needs in cash. This model bases its computations where L is the lower control limit, F the trading cost for marketable securities per transaction, standard deviation, the standard deviation in net daily cash flows, interest per day, the daily interest rate on marketable securities, Z asterisk optimal cash return point, and H asterisk upper control limit for cash balance. To compute for the optimal cash return point, the following formula is applied. Optimal cash return point is equal to cube root of 3, the trading cost for marketable securities per transaction, and standard deviation net daily cash flows squared divided by 4, the daily interest rate on marketable securities, plus the lower control limit. And to compute for the upper control limit for cash balance, the following formula is used. Upper control limit for cash balance is equal to 3 multiplied by optimal cash return point less 2 times the lower control limit. Illustrative case number 2, calculation of optimal return point and upper limit for Miller-Orr model. Suppose that ABC Incorporated would like to maintain its cash account at a minimum level of 100,000 pesos but expect that the standard deviation in that net daily cash flows to be 5,000 pesos. The effective annual rate on marketable securities will be 8% per year, and the trading cost per sale or purchase of marketable securities will be 200 pesos per transaction. What will be ABC's optimal cash return point and upper limit? And dito naman tayo sa solution. The daily interest rate on marketable securities will equal to, kukunin muna natin yung daily interest rate since yung given ay per year siya. So, 8% divided by 365 days is equal to 0.0021 or 0.21%. And then next, kukunin natin yung optimal cash return point. Optimal cash return point is equal to cube root of t multiplied by 200 yung cost per transaction multiplied by 5,000 which is yung standard deviations and divided by 4 multiplied by yung daily interest rate plus yung lower control limit na 100,000 pesos. So yung makukuha nating optimal cash return point ay 126,101.72 pesos. So dito naman tayo sa upper control limit for cash balance. So yung 3 multiply natin siya sa nakuha nating optimal cash return point na 126,101.72 pesos less yung 2 multiply by lower control limit na 100,000. So after that, isa-subtract natin yung dalawa and yung makukuha nating upper control limit for cash balance ay 178,305.16 pesos. So as shown in the computation, the firm will reduce cash to 126,101.72 pesos, which is yung na-compute na optimal cash return point by buying marketable securities when the cash balance gets up to 178,305.16, which is yung upper control limit for cash balance, and mag-increase naman yung cash sa 126,101.72 pesos by selling marketable securities when the cash balance gets down to 100,000 pesos, which is yung lower control limit.
Other factors influencing the target cash balance. First, option to incur short-term borrowing to meet unexpected demand for cash. As the word itself, it is a short term, so that means it is a year or less. Transaction cost and time element. Transaction costs as well as time associated with trading securities have caused some business firms to sell their marketable security in order to meet any unexpected demand for cash. And lastly, the third, I'm not going to explain it because it is self-explanatory and I'm just going to read it. Many firms must keep a certain average minimum balance in their deposit account as part of the borrowing agreement with their bank. Next, cash management techniques. There are 5. First is the synchronizing cash flows. Second, using floats. Third, accelerating cash collections. Fourth, getting available funds to where they are needed. And fifth, controlling disbursements. Cash management techniques. Number 1. Synchronizing cash flows. It is a situation in which inflows coincide with outflows, thereby permitting a firm to hold low transaction balance. The need of maintaining cash balance arises from the non-synchronization of inflows and outflows of cash. If the receipts and payments of cash perfectly coincide with each other, there would be no need for the cash balances. Next, using floats. Float is defined as the difference between the balance shown in the firm's book and the balance shown in the bank record. It arises from the delay in mailing, processing, and clearing checks through the banking system. Once a check is received by the bank and a deposit is made, it will take the bank to check and clear it in 3 to 6 days and credit it to the corporate bank. This works both for checks written to pay the suppliers as well as checks deposited from customers. This means floats can be merged to some extent through a combination of disbursements and collection strategies. There are 2 types of floats, the disbursement and collections float. Disbursement float, it represents the value of the checks the firm has written but which are still being processed and thus have not yet been deducted from the firm's account balance by the bank. For example, suppose that a firm write on an average in checking amount of 50,000 a day and it takes 5 days for the bank to check it and clear it and to be deducted on the firm's bank account. This will cause the firm's own checkbook to show a balance of 250,000, smaller than the balance on the bank records. Next, collection floats. It represents the amount of checks that have been received but which have not yet been credited on the firm's bank account by the bank. For example, suppose that the firm receives a check in the amount of 50,000 pesos, but it loses for days while they are being deposited and cleared by the bank. This will result in 200,000 pesos of collection float in the firm's record. And lastly, the net float. Net float is the difference between the disbursement float and the collection float. An organization may consider the value to understand how its fund may change after all sent and received checks processed completely by the bank. If the net float is positive, that is, the disbursement float is more than the collection float, then the available bank balance exceeds the book balance. A firm with a positive net float can use it to its advantage and maintain a smaller cash balance than it would have been in the balance of the float. The third cash management technique is accelerating cash collections. The finance manager should take steps for speedy recovery from debtors and for its purpose. Proper internal control should be installed in the firm. Once the credit sale has been effected, there should be a built-in mechanism for the timely recovery from the debtor such as prompt billing and periodic statements, and that is be prepared to show the outstanding bills. Incentives such as trade and cash discounts to offer to the customer for early prompt payments. This should be well communicated to the customer themselves. Prompt deposit. Once a check is draft or are received from customer, no delay should occur in depositing these receipts through their bank accounts. Direct deposit to firm's bank account. Customer may also be advised to deposit their checks or cash directly to the account of the firms and furnish detail to the firm. Fifth, electric depository transfer or payment by wire. Alam naman na natin kung ano to. With the development of taking place in the computer technology, the present of booking system is also being switched over the computer network of banks to offer efficient booking service and cash management service to their customers. And six, maintenance of regional collection office. The above technique can minimize the time lag between the time the customer sent the checks to the firm and the time when the firm can make use of the funds. This system of cash collection will accelerate the cash inflows of the firm. Next is slowing disbursements. Action on the part of the finance officer which slow the disbursement of funds, lessen the use of cash balance. First, centralized processing of payment. This permits the finance manager to evaluate the payment coming due to the entire firm and to schedule the availability of funds to meet these needs on a company-wide basis. It also results to more efficient monitoring of payables and float balances. Next, zero balance account or ZBA. Zero balance account. These are the special disbursement account having a zero balance on which checks are written. As checks are presented in a ZBA form payment, funds are automatically transferred to their master account. Third, delaying payment. If one is not going to take advantage of any offered trade discount for early payment, pay on the last day of the credited period. Fourth, play the flow. This involves taking advantage of the time it takes the company to check and clear the banking system. Fifth, last frequent payroll. Instead of paying the workers weekly, you can just pay them semi-monthly or the 15th day or the 30th day of the month.
So, let's proceed to the reducing the need for precautionary balance. Bakit nga ba kailangan i-reduce ang precautionary balance? When we talk about precautionary balance, it's like having some extra money in your savings account in case of emergencies. So, if a business can figure out the ways to lower the amount they need to keep in that emergency fund, it allows them to use more of their money for other purposes like pwede silang mag-invest or improve yung kanilang business. It's about being more efficient with their financial resources. There are three techniques that are available for reducing the need for precautionary balances. The first one is more accurate cash budgeting. Imagine yung company may gagawing project, and plano ng company kung ilan yung amount na kakailanganin para sa project na yon. So, if the company really good at predicting their expenses, they won't have to keep a large amount of money aside just in case something unexpected happens. Therefore, by getting better at budgeting, maiiwasan ng company na mag-save ng large amount for precautionary balances. The second technique is lines of credit. This is a prearranged loan where the company can withdraw anytime within the period agreed upon. When we say prearranged loan, it is a loan that has been established in advance with a specific condition. It allows for quicker access to fund when needed. In business, a line of credit is like a friend's offer, kung saan it is an arrangement with the bank or another financial institution na nagsasabi na pwede kang humiram sa kanila ng pera up to certain amount if kailangan mo. This way, a business doesn't have to keep a large precautionary balance all the time. They can use the line of credit if there's sudden need for extra fund. It is a way to be more flexible with your money. The last technique is temporary investment. Investment in highly liquid securities may be maintained instead of holding idle precautionary cash balances. So, dito sinasabi na mas maganda kung yung extra money mo is nilalagay mo sa places where it can earn a little more profit even if it's just for a short period of time. Imbes na nakasave lang yung money mo at hindi mo pa naman nagagamit, mas better kung i-invest mo muna ito temporarily so that maka-earn ka pa ng extra profit bago mo ito kakailanganin. Therefore, it is a smart way to use your money wisely para at least, diba, napapaikot mo pa rin yung pera mo, mas dumadami.
Marketable Securities Management. Sa topic na ito, i-discuss natin what is the objective of marketable securities management, reasons for holding marketable securities, and the factors influencing the choice for marketable securities. So to understand what marketable securities management is, let's define marketable securities. These are highly liquid investments or financial instruments that are or can be easily converted into cash. This can be sold or converted into cash for less than a year. So what is the objective of marketable securities management? The firm may hold excess funds in anticipation of a cash outlay. When funds are being held for other than immediate purposes, they should be converted from cash into interest-earning marketable securities. If may excess funds ang firm at wala pang paggagamitan, the firm may invest it into interest-earning marketable securities. Since the cash is idle, and if the firm has an estimate of when they will need the money, they can invest it so that it can earn money while there is no immediate use for it. Next are reasons for holding marketable securities. 1. They serve as a substitute for cash balances. They are an excellent substitute for cash and bank balances. Idle cash does not grow since no return is received by holding it. On the other hand, bank balance offers only a meager return, whereas such securities not only offer an adequate return but also retains the benefits associated with holding money since they are highly liquid and easily transferable. 2. They are held as temporary investment. Since the funds of the firm are idle, the firm can invest it since it can earn returns and the investment can be easily converted into cash whenever the company is in need to use it. 3. They are built up to meet known financial requirements. Halimbawa na lang sa bonds. When we issue bonds to creditors, may mga additional expenses pa tayong babayaran aside from the principal amount, which is the interest expense. When the funds from the issuing bonds are still not in use, the firm may invest it into marketable securities. The interest earned from these marketable securities can be used to pay for the necessary expenses that were incurred on the issuance of bonds. So next are the factors influencing the choice of marketable securities? 1. Risks such as A. Default risk. Ito yung risk na baka hindi makabayad yung issuer ng marketable securities. B. Interest rate risk. This refers to the risk na baka biglang mag-decline ang market value ng marketable securities dahil sa pagtaas ng interest rates. C. Inflation risk. It refers to the risk that inflation will reduce the real value of the investment through the decline in purchasing power. For example, nag-invest ka at nilagay mo ang pera mo sa time deposit which will mature in 5 years with an interest rate of 5%. Through the years na time deposit ang pera mo, posibleng tumataas ang inflation rate. When the security matured, ang inflation ay nasa 7% na, which means mas mababa na ang value ng pera mo dahil sa sobrang taas ng prices ng goods and services. Gaya na lang ng mga nakikita natin sa social media na dati ay nakakapuno pa ng cart yung 500 pesos pero ngayon konti na lang yung mabibili mo. Same pa rin ng 500 pesos yung pera mo pero since mababa ang purchasing power mo dahil sa inflation, ay mas konti na lang ang kaya mong i-avail. Marketability risk. This refers to whether or not your marketable securities can be sold at close to the quoted market price and is closely associated with liquidity risk. E. Event risk. Ito yung risk na baka biglang mag-increase yung default risk ng marketable securities kapag may mga unexpected events like merger, recapitalization, or a leverage buyout. 2. Maturity. This refers to the length of time or period that the cash is locked in a marketable security. The company decides kung hanggang kailan nila kaya or pwedeng ilagay sa marketable security ang pera nila kasi nakadepende rin ito sa company's need to use the money. And lastly, yield or return on securities. Nakadepende sa company kung willing ba silang mag-risk sa mga high-return investments which will give them higher returns or if they're willing to settle sa low returns pero lower din ang risk. But syempre, they need to assess pa rin based sa need or use ng pera na i-invest nila.
Money market instrument. These are the most suitable investment for idle funds. The money market is the market for short-term debt instruments. Money market instruments are high-grade securities characterized by a high degree of safety of principal and maturity of 1 year or less. The two major types of money market instruments are discount paper, a money market instrument which sells for less than its par or face value. The difference between the security's purchase price and par value represents the investor's income. At maturity, the investor receives the face value or par value of the instrument. So that discount paper this method allows issuers to raise funds quickly and efficiently for short-term financing needs, while investors can potentially earn without the need for regular interest payments. Discount paper is a key component of money market, providing liquidity and serving as a relatively low-risk investment option due to its short-term nature and backing by reputable issuers. Interest-bearing securities. These are the instruments which pay interest based on the par value or face value of the securities and the period of investment. So, investors in interest-bearing money market securities receive regular interest payments, either at fixed intervals or at the time of maturity, in addition to the return of principal amount invested. Treasury bills. These are short-term government securities with a maturity of 1 year or less, issued at a discount from face value, often called risk-free security. These securities are tax-exempt with high degree of marketability. So, treasury bills, the income earned from treasury bills is derived from the difference between the discounted purchase price and the face value received at maturity, rather than from periodic interest payments. Other short-term commercial paper issued by finance companies, banks, and other corporations. These are typically unsecured and maturities range from a few days to 270 days. Commercial papers is usually discounted but it can be interest-bearing. So, these securities are considered marketable because they can be readily bought and sold in the secondary market before their mature date. They offer flexibility to investors who can buy and sell them to manage their liquidity needs or investment portfolios. Negotiable certificates of deposit. Certificate of deposits are short-term loans to commercial banks with maturities ranging from a few weeks to several years. Certificate of deposit contains some default and interest rate risk but can easily be sold prior to maturity. Is a certificate of deposit or CD is a type of savings account offered by banks and credit unions. You generally agree to keep your money in the CD without taking a withdrawal for a specific length of time. Withdrawing money early means paying a penalty fee to the bank. Repurchase agreements. These are sale of government securities or other securities by a bank of securities dealer with an agreement to repurchase. Repos usually involve a very short term overnight to a few days. These are attractive to corporations because of the flexibility or maturities. These agreements have little risk because of their short maturity and the commitment of the borrower to repurchase the securities as a fixed or higher specified price. So, repo, a purchase agreement, is a transaction in which the borrower temporarily lends a security to the lender for cash with an agreement to buy it back in the future at a predetermined price. Banker's acceptance. A time draft drawn and accepted by a bank, usually used as a source of financing in international trade. Bankers' acceptances are sold as discount paper with maturity ranging from a few weeks to 9 months. The yields on acceptance are competitive because of low default risk owing to as many as 3 parties who may be liable for payment at maturity. So, investors can buy and sell bankers' acceptances in the secondary market, providing them with a way to invest in a short-term trade-related instruments. They offer of a yield to investors and are considered fairly low risk due to the involvement of the bank's creditworthiness. Money market mutual funds. This is an open-ended mutual funds that invest in money market instruments. Money market mutual funds sells shares to investors and then accumulate the funds to acquire money market instruments. These funds allow small investors to participate directly in high-yield securities that are often dominated in large amounts. The MMMF shares are highly liquid because they can be sold back to the fund at any time. Returns of yields depends on the money market instruments held in the portfolio of the funds. So, a money market mutual funds is a type of mutual funds that invest in high-quality, short-term debt instruments, cash and cash in equivalents, though not exactly as safe as cash. Money market funds are considered extremely low risk on the investment spectrum and thus carry close to the risk-free rate of return.